Hey everyone, I want to welcome you to this episode of the HX Podcast. Today I'm joined by an old friend and colleague, Eric Wade from Stansberry Research. First off, Eric, how you doing today?
Doing great, actually, and excited to be doing this because I think we've been talking about it for a while, and I'm just happy we're finally able to catch up.
Yeah, man, like I'm totally psyched. We always have great conversations whenever we get together. It seems like we get together every time in Las Vegas, not doing anything really fun, but just, at the conference and everything. The first thing I want to do, you have a very interesting background. It's funny. I have a very interesting personal background, but then almost kind of a boring career one. I went to Wall Street and was there for 25 years. And now I do all kinds of stuff, but you've done so many things. Maybe just walk us real quick through your background and then how you kind of got to where you are today, because I think it's a fascinating story and it'll help set the stage for, what we're going to talk about today.
Well, first off, I think we're both kind of blood brothers from the Southwest, if I'm not mistaken. We grew up neighbors next door. I was in New Mexico, and my background is that my father worked at the Los Alamos laboratories, scientific lab at that point, in the national lab. Yeah. And he, rest in peace, he just passed on, but he was
I'm sorry to hear that.
Thank you. He was in the controlled thermonuclear.
Holy shit.
Controlled thermonuclear reactions department, but he was a programmer for it. So
okay.
we lived in this world of clearances and secrecy. And
wow.
Dad tells you he writes programs that tell you when to change a light bulb for a living. That's what he could tell us. Right. So I grew up around that, and Los Alamos also being at times known as the most educated city in the world because everybody there had a PhD, at other times one of the highest income per capita in the world. So growing up around that, I was absolutely fascinated by the idea of cryptography as a big concept, right?
Can I stop you for 1 second? I want to go there, but I have one New Mexico thing. I don't know if you know this or remember this. My family were part of the original Spanish settlers of New Mexico. They got there in 1692 as part of something called La Reconquista. So like the Abeta name, my family is like old school New Mexico. So I forgot that you were from New Mexico. That's really, I was neighbors in Arizona, but I'm as New Mexican as New Mexican gets.
That's fantastic.
On my dad's side.
I know the name, but I didn't know that was your family name.
There's a church. The church in Chimayo, which is the most visited church in all of New Mexico, is actually called the Abeta Church. It was founded by Don Francisco Abeta in like 1720 or 16, I don't know, some crazy numbers. So anyways, I wanted to get the New Mexico stuff out there. Cryptography, Los Alamos. Yeah.
I'm glad you did interrupt though, because now you gave me some homework, because my college roommate was from Chimayo, and we went up there and visited a lot. So okay. Wow.
Los Alamos and the nuke. So you're hanging out with Robert Oppenheimer, although I don't know if he was ever in Los Alamos.
And hanging out with people that cared about secrecy and privacy, and not just so they could protect the work they were doing, but even deeper, the philosophy behind, do we have the right to privacy and secrecy and cryptography, etc. And so when cryptocurrencies came around, which was an application of that technology as a peer-to-peer electronic currency, obviously I was hooked. The minute I heard about it was the idea that this technology I grew up liking or having an affinity for, or at least knowing it had a place in the world, and then the application of it towards currency, or the potential of currency, I was hooked.
Got it. And so, well, so what did you do? So with your background, that's crazy. I didn't know the Los Alamos thing. That's really interesting. But I remember too in your background, and then we're going to launch into what you've done recently because your work. You've just finished a project that's really really fucking cool. But
Thank you.
I remember reading that you were involved in music. You've written screenplays. Like walk us through just kind of how you got from Los Alamos, New Mexico, with this interest in privacy, cryptography, economics, etc., to where you are today at with Stansberry.
So at the risk of it sounding like I'm out there or all over the place, went to college, staying in New Mexico, and pursued economics, and got married right out of college, and became a stockbroker, and eventually found my way to Merrill Lynch, became a financial manager, got every training they could possibly offer me, and then I got bit by two bugs kind of at the same time. My wife is a writer, and together we would write screenplays. One of those screenplays eventually got optioned by Adam Sandler's company. They're trying to make a movie for David Spade, if you can imagine David Spade being Santa's son, and never got made. But we sold the script. Actually, sold the script twice.
That sounds a little bit like Elf, which is it's not, but
it was actually before then, but it was but in that kind of a vein, and we wish it would have been made, because I personally think David Spade would have made a great son of Santa who's struggling to keep up, right? But
absolutely.
I also got the internet bug, and both internet as far as the potential for communications and the commerce side of it, and bought a domain name, wallstreet.com, eventually ended up selling that in the .com boom for over $1 million. But then I left.
What is that domain doing now, by the way? I mean, that's a fucking awesome domain, wallstreet.com.
Yeah, I haven't kept up with it other than every couple of years you check in on it, and I think it gets handed around a lot.
I'm gonna look it up while you continue with the story. So
yeah, I know that everybody knows it's a good piece of real estate, but I don't think it's actually ever been completely monetized properly, because it does seem to change hands a lot.
I've got a funny story, and sorry, this is part of this podcast. We'll move around a little bit.
Do it.
It is owned by something called Hilco Digital Assets, and it's for sale. And at the top it says, the wallstreet.com domain name asset is one of the most valuable, important domains on the internet. We are accepting serious bona fide offers only. So apparently you could buy it back if you wanted.
full circle, right? Yeah, I could get back into it. Hey, I often think, I wonder if it'll ever become available again, and something that I would. My tendency, though, is to try to pay a lot less than what I sell things for.
Yeah,
so I don't think,
Well, you should call Porter.
Offer.
Yeah, call Porter and see what he says. So, okay, so you sold wallstreet.com back in the back in the internet times, and then from there, where did you go?
Yeah, I spent a few years pursuing like digital advertising, stuff like that, because I thought that was a growing medium, and that was one of the ways that internet was monetized initially, and then semi-retired from that. To kind of did a soft retirement, and my daughter being a musician. The family just got involved with a music venue. We created a music venue for her as she graduated from high school, and an all ages venue. It was in Hollywood. It was kind of in the shadow of Paramount Studios, right on Melrose, and spent a number of years. I think we had that for 8 years or so while she was
fascinating.
Working through her career.
I didn't know this.
Yeah, it was a lot of fun. Yeah. We broke a lot of great bands because it was all ages. Then a lot of the labels that were in Hollywood would send bands over there to get their first experience on stage, and it was small, very small, very intimate venue. It's been likened to the Cat Club that the Beatles would play in Germany, because it was small and
what was just out of curiosity, what was the name of the venue?
It was called Amplify, but we mixed up the vowels on it so that we could own the domain name on that as well.
Okay.
So it's AMPLY.
Okay, cool. Yeah, I'm learning so much about your background here before we even start. So
that was mostly my daughter's, but I had a lot of fun helping with it, and sometimes I'd get to run the soundboard and but then in the meantime, while I was doing that, I kind of got this side path of getting involved in cryptocurrencies, and I was I was both early and late to it. I didn't even discover Bitcoin until 2013. That was my first exposure to it. And like I'd mentioned, I immediately fell in love because, a currency that's non-sovereign and using cryptography and cryptographic technology, I was hooked. So then down the path of that, and then mining Ethereum, and getting to learn more and more and more about it, and eventually found my way to Stansberry.
Okay, awesome. And we're going to come. I want to come back and talk about that in a second. So you've done something really incredible just now. So I guess what I wanted to, the Los Alamos thing is fascinating to me. You've had a very diverse background. And, as far as I'm concerned, and I've known what you've done in the last 10 years, you've been a leading proponent on crypto and just been so while 2013 is late, it's actually, 5 years earlier than probably 90% of the people that are out there that are involved today, if not 95. You recently wrote a book, and you sent me across some highlights from it. I was fascinated. I mean, I and I'm going to get this wrong, but the first thing that caught me was this contrast of incredible optimism with some realistic pessimism. Like, I know you, and you come from the crypto world and things like that. And it was this real dichotomy, but give us real high level, the goal of the book, the idea behind the book. If you had, you got your elevator pitch, how would you explain the book to our audience?
Well, first and foremost, I've done pretty well under capitalism. And I think capitalism is one of the driving forces of freedom and prosperity in the world. And no argument there. But after a while, I started to think of capitalism almost like a B+ student. That, hey, you're doing pretty good, but we got tents on our sidewalks, right? We have, even beyond that, we've got people that are just, I call them the involuntary poverty. And the estimates are about 30 to 40 million people. So the boil down on that is they're both true. Capitalism, powerful, wealth creating tool, but we have an unacceptable number of people in America who'd like to do better. So I came up with what I thought would be an upgrade. And if you don't mind me getting really weedsy for just a short amount of time.
No, that's okay.
Your audience probably knows more about this than most, but most Americans that think of us as a capitalist nation, they forget that there was an economic system out there in the world prior to capitalism. The Western world mostly lived under a mercantilist system, and the mercantilist system, and I'm gonna slaughter this just for the interest of time and so that people don't tune out on us, but mostly believed that the resources that are out there are the resources that are out there, and the way you make money is by trading them or by owning them, rather than what we think of as like, if you don't like something, go out and create a solution. That's capitalism. Mercantilists thought, if you don't like something, go out and get some assets from somewhere else to solve the problem, right?
Well, I think, can we put that in historical context? Because I'll bring it to people. Before the Industrial Revolution and before technology, there was innovation, but there wasn't really. And our entire system is built on the ability for people to go out and create, me to go and create this independent research firm. We did this in 3 months. 100 years ago, there were X number of houses, X number, there was only so much. There wasn't new shit really being made. And so you kind of had to deal with what was there, and it just was much less about innovation. You didn't have the capabilities. So, I mean, it makes sense. But, it's funny. I haven't thought about a mercantilist system in probably 30 years. You're going to get me thinking there already. So.
Well, and one of the fallouts of that was exploitation of natural resources and exploitation of people and populations, because there wasn't a lot of respect for that. So capitalism, and you nailed it, with the Industrial Revolution could not have survived under mercantilism. So we needed capitalism at the time that we needed the Industrial Revolution. And a lot of people don't know this because capitalism kind of has a rap for the maximization of capitalism feels like, well, how can I pay people the least amount possible and make the most profits, right? That sounds like a capitalist trope, right? But originally when Adam Smith wrote about capitalism, he didn't believe that. He actually believed he wanted to see labor earn more. And he thought the solution was, let's get people to earn more and maybe move them into the cities or something like that, right?
So the funny thing about what you said, and sorry to interrupt,
No,
successful
good.
capitalists think the exact fucking opposite of what you
Right,
just said.
right.
Like my goal, I hire people and I literally say, I want to pay you an amount that like melts your face. I want
Right.
to pay you more than you've ever been made before. I want to pay you an embarrassing amount of money, because if we get to a point where I can afford to pay you that and you're worth it, I'm making a crazy amount of money, and we've absolutely fucking crushed it. So,
Right.
you know, I think that it's almost like that's the critics' version of capitalism, the actual
Exactly.
inner workings of capitalism. If you're a good capitalist, you want to pay people tons and tons of money, because that means you're kicking ass.
Right. You
know?
can't wait
Yeah.
to spend money on the right people and reward them, because if you're doing capitalism right, that comes
Yeah.
back to you. And then some, right? That's the whole crux of the argument. So what we came up with, what I came up with, and I got a co-writer on the book, but we call it America versus Americans, and the general
Yeah.
idea is, how can we solve for that last bit of people that maybe all they need is another certification? Maybe they need to, better mastery of the English language. We don't know what it is, right? That's keeping people that want to do better in this involuntary poverty situation.
Can you describe? I didn't want to interrupt you before, although I obviously I don't have any problem interrupting you. What is involuntary poverty? Like you said, there are 40 million people, 30 to 40 million people involved. What does that mean?
Well, I'm gonna define it by saying what it's not. And there's people that I think don't want to join the system, be part of it, etc. And I'm not knocking anybody for their own life decisions, but I'm talking about maybe someone who's got 2 or 3 jobs and wishes they had one better job so they could spend more time with their family or something. Or maybe someone who wasn't able to finish their education and they know that's important to them, but their time is just soaked with inability.
Yeah. Okay, got it.
But
got it.
There are people who intentionally don't want to participate and don't want to earn more, and there's no judgment against that. I'm saying
so you're talking about people, and I actually know quite a few of these people that are frankly just working so hard to keep up with their families, their life, and not because they're overextended, just to stay afloat and alive. That they want to improve, they want to be in a better position. But it's like it's sort of like when you're building a business, right? If you engineer everything really well in the beginning, you don't have to do it later. But if you're in the middle of it, running it, it's hard to go back and re-engineer it and redo it. And like in our lives, we don't necessarily engineer them. We're just living them. And so all of a sudden you get to these points in your life, you go, holy shit, I wish I could do this, this, and this, because I probably would work less had I been able to do that. But I'm too busy just paying my bills and getting shit done. I mean, is that kind of
that's a good wrap up of it? Is too busy paying my bills, too busy surviving. Sometimes there's the okay job trap, right? Well, I've got an okay job, but I don't have time for night school, or I don't have time to finish my maybe even as simple as a GED or something, or a certification, right? And so we just got this idea that, and there's a lot of evidence that education helps just all the way around. And what we thought was, what if we could build an upgrade to capitalism that respects labor the way capitalism respects capital? And I'm going to say this, I hope it doesn't come across as too much of a snarky comment, because it's both true and snarky at the same time. When I say, when someone can't participate in capitalism and they want to, what's the answer usually? Well, get a job, right? Hey, you don't have any money? Get a job, right? And I hope that rings true with people. That I mean that in both a sincere and we've heard that, right? We've heard that as a snarky response, and some of us may have even said that to people in the past: is you want money, go get a job. So we thought, well, hang on, doesn't that kind of mean that then that capitalism has a base layer foundation of work? Labor, right? If you want to participate in capitalism and you can't, are they saying then maybe labor is an on-ramp to capitalism? Okay, well, how can we make labor more valuable? How can we make labor kind of the ladder, the on-ramp into capitalism. So we've got this sort of what we think is a pretty creative solution that let's make it so that anybody who wants any kind of education on a federal level, and the program we've come up with is just a federal program. States can do anything they want. But on the federal level, what if we just said unlimited lifetime free education, and the only strings attached are you have to participate in working for the community that you're in. One day of work, you get the other 5 days of the week. One day of education, one day of work, and you get the other 5 days to do whatever you want. Pursue more education.
So you just set off, by the way, 60-70% of the audience, which was like, oh, we're giving it away for free, and now they're communist, and it's like I just heard in half my brain. It's probably 60%. Half the brain, the audience, just like, wait, what? Free education?
Absolutely not communist. And okay, it's free in the sense that we know nothing is free, and the free part of it is we're trying to make it self-sustaining in that you get the classes and you participate in helping out, and we find that balance somewhere. And I think we all probably know in the back of our minds that we got AI in our future, and classes are going to start looking a lot different very soon. We're going to be able to train people and educate people using AI to be zeroed in on exactly what they mean. I don't mean a big auditorium with 1,000 people that are groaning their way through some introductory class. I mean, if what you need is a better command of the written language of our country, then that's what we'll teach you. And for so many people, that could make the difference.
VR also too, and I'm not talking $4,000 Apple headsets,
right?
But I think that the combination of AI plus VR, you can take that experience, and I do think that with VR, and God forbid the M word, metaverse, that it can create an ecosystem. I watch my kids playing Roblox and how they interact with others. There's a way to flatten the world and and then get that information out there and that learning and that community around education, because we teach each other when we're in school too. It's not just about listening to the instructor, in my opinion. Okay. So AI, VR, bring affordable free education to folks in exchange for some community service work, et cetera. Okay, so is that step one, would you say?
Yeah, that's step one. And actually think of it kind of like a color wheel or like a record on a record player is wherever you start, you're going to go all the way around. So we believe we should have a hard currency. We believe that the U.S. dollar can and should be backed by assets. Talk about that in the book.
We're going to come back to that, because that's another very popular topic, and we'll spend a good 5 minutes on that.
And we support it. I think the way we run America right now, I think everybody is right to think impossible, dude. You can't do that. Why? Well, because we're spending $4 trillion a year and taxing ourselves $2 trillion, so you can't have a sound currency. Well, let's fix that. So,
you've given me two unicorns, right? You give me free education, and you gave me a hard fiat currency. So let's continue.
Right.
Am I going to be on Mars next week?
10% federal income tax.
There's the third unicorn.
10% with a couple of asterisks next to it. We're going to go to 2% once we've paid off the national debt. We think we can pay off the national debt in 30 years. Now, I know right now this makes it seem like the book just turned into fantasy, right? Eric, it sounds a lot like that script you wrote about Santa Claus and his son.
I'm going back to we got a herd of unicorns now. Sorry, my daughter loves unicorns. So everyone loves unicorns, but okay. So let me just wrap my head around this. Give me a second. Free education, hard fiat currency, 10% federal tax rate, going to 2%, and I know I'm just picking the headlines, the most controversial, and pay off the federal debt in 30 years.
Right. So
do you believe in legalized marijuana, by the way? Sorry. Anyways.
I don't have much of an opinion on that. I'm one of the few people
I was making a joke that it sounded like you were smoking marijuana, when you wrote the book. That's like, it was, okay. No, but here, let's continue. Because I want to say I'll say two things. Number one, I actually obviously strongly believe in those ideas that there's great value in them. I think all of us do. It's just the pragmatic, how do we get there? But number two, I know you, And I know that you're going to have some really interesting insights on how does this house, get built. So we got these four, very controversial. Do you got any more? What else is on the color wheel?
Yeah, so let me throw a
of
couple at
unicorn
you that people may not like. First off, I don't like this. I do not like having to put this out there, but 0.25% wealth tax. I hate it.
Okay.
It's been tried in Europe and failed because they went much bigger than that. But what we're trying to do is we're trying to prevent the whole society from gaming taxes. That if all you have is an income tax, it doesn't take anybody that smart to figure out, well, I just won't declare income.
I actually think that's as popular. That might be more popular. There's a funny thing about the wealth tax, in my opinion, that unless you're the super wealthy, like I know people that are in, brackets that are making, I don't know, hundreds of thousands, $500,000, whatever. They for a wealth tax for people that are making 100 billion, or not. No one's making 100 billion. You get my point. People that are making tens and tens of millions just from income. I think the practicality of the wealth tax, the actual implementation, is the devil in the details. But I think, like, from a philosophical perspective, a subdued wealth tax, or a lower amount is actually got a decent support. Okay, so a wealth tax gets put in there to
we can
balance
do it. We can do everything we're talking about with 0.25% and 10% income tax, but and this may lose me some of your audience. It may not, but I don't believe in progressive taxes either. And the book goes into a long, detailed, well, not that long, but a decent, detailed explanation of, I don't think progressive taxes are fair. I think everybody who's here, who's living off the benefits of America, and this is just for America, but I think everybody should have the opportunity and obligation to participate. So if we can lower taxes down to 10%, and we specifically say in the book, we're not trying to balance the budget on the backs of the lower earners, but I believe in equality, and I don't believe that someone can be told both, hey, you're completely equal, oh, and by the way, someone else is covering your taxes for you, right? We need to spend money in this country. We need to keep the lights on.
Skin in the game. Skin in the game. And
skin in the game.
Here's the thing.
Fair is fair.
The 10%, and this will sound, I don't want this to sound the wrong way. 10% of a low number doesn't really help the problem, and doesn't necessarily hurt it does hurt the person. That's 10%, but there's other factors coming in here. Right. But I think it's an alignment of interest.
It really is, and it levels the playing field. It also allows us, if we eliminate all loopholes and we get everybody paying the same amount, then America can start to heal from the whole division and the concept of my secretary pays less taxes than me being a billionaire stock trader, who I know you respect that billionaire stock guy a lot, who says his secretary has a higher marginal bracket, but we got to fix that, and we need everybody to pay the same for this to work. So those are kind of the big issues. I also want to reduce the government down to only 3 departments, and this is laid out in the book: military, education, but we're changing that. We're calling it the advancement department, and the post office. So everything else that the federal government does, because we need a post office, and we're going to roll the Department of the Interior into the post office, things like that. But everything else the federal government does needs to be handled somewhere else, because I think our federal government has gotten to a point where it's just too big, it's too distant from the people that it's serving. It's just outrageous to me how anonymous our government has become, and it's the biggest employer in the country. That shouldn't be right.
The problem is, all of these structures in economics and society are made up of humans. And human organisms, both individually or as groups, are built to self-sustain and sustain each other and themselves. And so government has become we're not the only ones. So I'm going to tell you something. We're going to get really wonky here for a second. Okay. So I call this firm HX Research. And, people ask me, why'd you call it HX? Well, first off, it looks really good on a T-shirt. Actually, I got to point to the right side here because of the camera. It looks really good on a T-shirt. It's catchy, but I was actually trying to think of a name And I love the idea of a dialectic, right? The dialectic is a description of the interaction of human history and society where there's an orthodoxy that sort of controls society or the economy. There's a disenfranchised group of people that revolt against that orthodoxy. It creates a new, like a revolution and something new. And then the heterodoxy are the rebels. And then inevitably they create another orthodoxy. Government in many ways is just these dialectics going over and over. But what happens is, government just works to self-sustain. So HX stands for heterodox, by the way, the H and the X. Although I never, if I went out there and called it heterodox research, people would be like marbles in their mouth. So I think that it's just a very natural human problem with government always. It's always going to be. I don't think it's ever going to go away either. We can put in processes just like you put in processes to prune plants and shit like that. But it's part of human nature and human existence. So downsize the federal government. So we got quite a wish list here.
Yeah.
Anything else you put on that wish list?
Those are the big
action
ones.
list. I'll call it the action list.
Yeah, those are the big ones, and I believe if we start with the idea that by educating people that need it, so that they can get their labor to be worth more, then one of our goals is, and this is one of my favorite lines from the book, is if we can educate people who need help to the point where they don't. Okay, and that's kind of we just spent a half an hour with me answering a question I could have answered right then and there, right? As he said, what's the main idea is, can we educate people to the point where they don't need help anymore? Okay. And then they're free to go. So the back of the book actually says, if you're doing well under capitalism, carry on. Have a good time. Just pay your taxes and we'll leave you alone. Because really what we're trying to do is, like I said, if capitalism is a B+ student, we're trying to find how can we help the people who need help and stay out of the way of the people who don't need help. Give them some lower taxes, give them a smaller government, less regulations, and then bring up the people, hopefully in a self-sustaining way. And by go ahead.
Yeah. So let me ask you a question though. Okay, because I everything you said I believe works in a vacuum. I actually think when you tie all the pieces together, they work. The challenge is we're here and that's over here. It's like, I'm going to do a crazy example. We got this beach, right? And we want to build a water park on the beach, but right now the beach is full of hotels, motels, and all this other stuff. We think the water park's going to be a lot better than what's there right now. The problem is what's there right now has all these people who are running it and they own it. And it's just a SOB to get from one to the other. How do you think we get there? Or is your vision, I don't know that we'll get there, but let's start making steps to go in that direction and then we can get some progress. How do you address that obvious and very tough question?
Yeah, and that is a great question. And our goal is basically, we feel like we just launched the book Wealth of Nations. And when Wealth of Nations went out, we didn't have people that were Instagram influencers for a living, right? And that's as capitalist as you can get. We had blacksmiths and we had, trades, and that was the idea. And we had shipbuilding, and right, that was when capitalism was launched, and nobody could have envisioned that we'd be here with lending money to other countries overnight so that my money can keep moving instantaneously digitally. That wasn't
we've gone from a physical and goods economy to an idea economy. When you look at actually the velocity of money, the amount of money that's moved, I could research this number. I'm going to guess that 60, 70, 80% of the money on Earth actually, or 50 plus, how about that, or especially in the Western world, moves around ideas, not actual things I can hold in my hand,
Probably.
Which is just a whole nother
Yeah.
crazy thing to put in your head.
And the concept being that capitalism allowed that to happen and morphed and grew. So if we can introduce the idea of what if we valued labor more? What if we got back to kind of the roots of capitalism, and maybe we'll see a scene this is one of my dream scenes, is we'll see a scene where a kid comes home from the protest where he's out yelling, and his backpack opens and the dad sees that he's got a copy of America versus Americans in it, because the kid is saying, why don't I have free education? Why don't I have access to, all the power of America? And the dad is saying, that's not your book, that's my book. Why am I paying such ungodly amounts of taxes my retirement isn't secure? And then grandpa or grandma walks in and says, what are you talking about? That's my book, because I need a hard currency. I need you to save Social Security. I need the balanced budget, right? I don't want to hand this world over to you next generations in a pile of debt. So that's kind of my goal. And I think that's what, if we could get there, where different generations are saying, why don't we fix this? And talking to each other about it, maybe we can even get some people out on the streets yelling about it, saying, hey, where's my free education? Hey, where's my low taxes?
One last question on this, and I want to take this somewhere else. When you say, so is the concept that labor is more enfranchised, is better compensated, is more aligned with the goals of the owners of production, which is capital now? I mean, is that kind of a core to this concept?
Yeah, it is. And we actually have a chapter, why labor is better than capital. And we go into that a little bit of that. I mean, again, hard to argue sitting in a capitalist world where we've got so much opportunity, hard to argue that it's terrible. But what we're trying to make the argument is, if we focused on labor, things could get better. Right. If our goal was to pay labor more, to respect labor more, then we can go from being a B+ student to an A+ student. And we can get everybody, because there's a lot of people out there who and this is what we say is, you own your labor from day one. Right? You may not be born with any capital, but you can be born owning your labor. So let's work towards a system where that counts for something.
Look, even money's just money. It's just a thing, and it's kind of a fucking made up thing. Like, without people actually going and doing something with it, and, all my businesses have been built on labor. Like, it's like I've never had, I actually own a vinyl record pressing plant, which has some machines and all that. But, without people doing things and moving things forward, money's just this made up imaginary NFT, I joke, this digitally registered, thing that we've agreed has value and all that. So that makes some good sense. So I want to first off, I want to say, where can people buy your book?
Supposedly it's everywhere. Small bookstores may or may not have it in stock, but they can get it. Simon & Schuster is distributing it. So it's in 130 retailers. I found the easiest, fastest way to get your hands on it is Amazon.
Of course.
But if you have a local bookstore, they should be able to get it, and you can just ask them, hey, order me a copy of it. Okay. And we're trying to get into as many libraries as possible too. So ask your library. We've done all the work to make sure that libraries can get access to it as well.
Or buy 2 copies and donate one to your local library.
There you go.
To do it. I wanted to do this. I want to change tacks a little bit. I encourage everyone to go out and check out the book. I think there's some positively fascinating concepts in there. We didn't even start to talk about hard currency and all that. Like, my mind was just blowing up, over and over and over. But I want to go someplace else. And this is off of the book. So, Stansberry just put out their report card, and the report card. The publisher Stansberry goes through and goes through the 5-year track record of all the newsletters that are there. And gives them an A to a, I didn't see any Fs, but there might have been one D in there, but there was one A++. Okay, and that was your newsletter. I forget which one it was, but I want to do a very particular thing here. So with HX, one of the things I was blown away with Stansberry, MarketWise, the organization overall, was this concept of taking complex ideas and putting them in language that real people could understand. That's number one. But number two was actionable ideas. I kind of joke. You said something earlier. I go that quote from Jesus of the Bible, right? Give a man a fish he eats for a day. Teach a man to fish and he can eat for the rest of his life. I kind of feel what we do at HX, we teach you how to fish, and while you're learning, we actually hand you a fish also. That's kind of the idea of having actionable ideas in the newsletters. That what's better than learning how to do something. Again, what's better than learning how to bake a cake is eating cake while you're learning how to bake a cake. That's what our newsletters are trying to do. Okay,
nice.
So let's take all the stuff that you said, because everything that you said is rooted in your understanding of economics, the economy. You've got a fucking awesome track record. I'm not asking for ideas, because we don't really do that here, although we're happy to have them. When you look at actionable ideas that our listeners could focus on, or areas of opportunity in the next 3 months to 3 years, okay, we can talk about 30 years too, but it's that's another group of concepts. Well, actually, let's do that. 3 months, 3 years, 30 years. Where do you think the opportunities are for investors, traders, based on sort of the framework that you're looking at, the framework that you discuss in the book?
So, at risk of boring people, you can't knock Bitcoin, and don't take that to mean that's the only thing. But right now, it's half of our industry, the crypto industry, is Bitcoin, and I liken it to an elephant pulling a cart. Right? You can have an elephant, you can have a cart, but the cart is going where the elephant goes. We know that, right? So don't knock Bitcoin. Plus, we've got fantastic catalysts coming on Bitcoin. We're seeing the effects of the American spot ETFs being authorized. That, now a whole new class of investor is coming on board with Bitcoin. And not only a new investor, but a new advocate as well, because we've got these public companies now, they're advocating for it. And we've got a halving coming up. And AI likes to use Bitcoin to spend when AI needs to spend money, because AI can't have a debit card. So Bitcoin, I'll never get tired of talking about Bitcoin.
Can we stay on Bitcoin though?
Sure.
Believe it or not, I might want to stay on Bitcoin the whole time. I want to hear the other stuff too. But let me just, because I also was not in crypto. Scott really involved 3-4 years ago. I have a couple buddies, by the way, that worked at my fund, Falcon Edge Capital, that like crushed it. Just like guys that were like, there's this crazy thing, I'll just throw 30 grand into it because what the hell, and it just did crazy numbers. But I'm fascinated. Like I struggle, and we'll see if I end up recommending this in our longer term things. I actually want to recommend Bitcoin. Okay. And I struggle because, we have paid newsletters, and who needs me to go tell them to buy fucking Bitcoin? Or there's a million people saying it, but I think you should buy fucking Bitcoin. And for me, I'll give two kind of setups here. The first setup, and you've got a lot more data on this, and so this will be a learning for me too. I read about people in international markets, like in Turkey and Brazil and Argentina, how they're holding so much Bitcoin, that you're seeing more and more independent pieces of demand. And one thing, my view is all currency and gold is fucking worthless, right? Like gold's my favorite one to talk about, because something like 3% of the production of gold every year is used for industrial use, and we have over 300 years of actual gold if we just did industrial use. So the only reason gold is valuable is because we all agreed gold was valuable, and there's a bunch of people that think it's valuable. Frankly, that's where we are with the US dollar. It's not backed by anything, and so they keep on printing more. I mean, the difference between Bitcoin, gold, and the US dollar is simply the velocity of the increase of the increase in supply, and then it just comes down to our belief in it. But I feel like the waves of demand that can still come, that maybe we've only seen 1% of the demand that Bitcoin could eventually have. I don't know where we stand in the supply. You're going to give me that number in a second. But this leads to the second setup. Is I feel like with Bitcoin, you've got this nice wave that you could buy it right now, 43,000, 45,000, wherever it is. My CNBC went off. You can buy it right now, but you may have these moments where it just goes fucking parabolic too, because it's this supply demand and commodities where there's limited supply. It doesn't take crazy changes in demand to cause prices to get parabolic. Now, when it goes parabolic, you should probably take some profits. But so that's in my non-crypto guy head view of Bitcoin. Where am I right? Where am I wrong? What did I say that was really fucking stupid?
Well, for nothing that's stupid. I do disagree with you on gold as an investment. Gold, okay. you have to like decade timing if you like gold. If you're looking for a good trade, then right, you buy gold.
Let me say something about gold. Let me say something about gold. Hold on 1 second though. Like I actually will say this. I didn't say gold was a bad investment. I just said gold was worthless. Okay, those are two different things. Okay, Bitcoin is worthless too, by the way. I mean, there's no inherent, there's no cash flows, etc.
Right.
Gold is interesting to me because I do see the debasement of currencies. I do see conflict, and because we all agree that gold's valuable, and they ain't going to come steal your gold, okay? You know, they're not going to shut off your bank account and take your gold out of it, although, you know, there's whole things about physical gold and all that. So I'm actually constructive on gold. It wasn't a criticism to say it's worthless.
Sure.
I was just saying all of these, they're only valuable as long as we agree. I think there's a very constructive case, and gold is sort of like Bitcoin, that I see a parabolic potential. Like if the shit really hits the fucking fan, you know, your meta stock ain't gonna help you, but some gold will, you know, and maybe
and
some
what's
Bitcoin
nice about
will.
them, they're both somewhat global.
Right.
Bitcoin being, you know, digital global, and gold being, you know, thousands of years of history global. You can make the same case for some art pieces, some real estate.
Yeah, but
right?
it's not very
worth it
fungible.
because enough people are willing to pay that for it.
Yeah.
Creeps into almost a lot of things. Growth stocks, right? Why is one growth stock worth 15 times earnings and one of them's worth 40 times earnings? Because people are going to pay that for it.
That's right. Yep.
In case that sounds like a maybe a lazy analysis, I don't think it is. It's because we're humans. It's human nature, right? These things don't buy themselves.
It's the least lazy analysis. It's the most realistic. Like recently David Einhorn went and said the markets are broken. And I posted on Twitter, I was like, if you think the markets are broken, it's probably because your returns suck, and that means your return model is broken. Your investment I love David. David's a very smart guy. I do think he's got some challenges to his investment process. He's kind of stuck 20 years ago. But you got to deal with the world. You got to surf the waves you got, not the ones you want. You know, is the reality. Okay, so let's go back. You know, worldview, Bitcoin. You like Bitcoin. I think it's a great idea. Whatever, maybe gold, I guess, is another one that kind of fits this worldview that you're talking about.
Yeah,
that you think...
if we're going to get into a world, well, I almost think of gold sometimes as like a reasonable cost to pay if you're wrong. That, you know, if we're right, and if our currency hyperinflates, or any currency out there hyperinflates, then gold be a great place to hold, and it's a price I'm willing to pay if I'm wrong. You know, gold trading down a little bit because we never. What if we get this magical soft landing, and next thing we know, gold is for fools? Then it's not
an
going to go down to
opportunity
zero.
cost. It's like insurance. Okay, so I want to do. I'll ask you for one more, and then I want to go to one last concept. So those are two. I won't call them layups. But, you know, Bitcoin and gold in the apocalypse are, you know, fairly obvious. I mean, you know, look, I think there's nuance to that. What is a really interesting asset class, or you can throw out an idea too, that you think is not obvious that you would encourage people to take a look at given your worldview?
Okay, so I like just about anything that I can really put my thumb on. What is it used for? Who's using it? What is it used for? Stuff like that. So a smaller... I don't really want to talk too in depth about smaller tokens because they can come and go over time, and I don't know when people's going to be watching this. But there's one I like that's it's called Get, GET, and the reason I like it is because I understand the business they're in. They're trying to offer blockchain technology, but the business they're in is tickets to live events, and the relationship with the ticket holder. So a short way to think of it is taking on Ticketmaster with a superior technology and a superior user experience. Now, I know Ticketmaster has the market, right? So it's like thinking that you can make money by having a better tasting cola than Coca-Cola or something, right? I know what they're up against. Yeah. But if we can't start to see ways that this technology can improve our lives, then give up. And I think GET, I think they improve the live event experience. And so I think that's something people should look at. But
I'm going to take your cola analogy though, but and make your point. Fucking energy drinks, right? All those energy drinks, Red Bull, Monster, Celsius, none of them had any market share. They came
Right.
from nowhere. I mean, we in my community, out of the metal community, there was Liquid Death, the bottled water,
Yep.
or canned water. So I mean, it can happen. Technology can get in there. I mean, there's some vagaries with live entertainment that you have the place the physical people are, but I think there is potential. There are models that it's been done in other areas.
Yeah. So I like that one. And then if you can humor me for about a minute or two.
Okay.
Everybody probably owns some Ethereum. If they don't, they should. And I know Ethereum is it's hard to brag about because it's big and there's so many other faster, zippier cryptos out there. But there's something interesting about Ethereum if you stake it and it's earning a yield for you. There's DeFi programs being built out there where you can own Ethereum much like owning a rental property and then borrow against it. And so I won't give any specific advice, but imagine having an asset. Forget we're talking about cryptocurrencies for a second here.
Yeah.
You have an asset that's generating cash flow, for lack of a better word, a payment. It could be a rental house. It could be a vehicle. It could be beachfront property or something, right? If you have an asset and it's generating a little bit of cash flow and you borrow against it, it can pay that debt off, right? We're all familiar with that model. We buy our houses that way, or our second house, or our rental properties, right? So that's one of the things I like about what's going on in the DeFi space. And Ethereum Ethereum didn't build this, but they're building around the idea that Ethereum staking yield is available. There's platforms that are being built that say, okay, fine, if just owning some Ethereum can get me some staking yield, why don't I put my Ethereum in this platform, borrow against it, and then let it pay itself off? So it's a self-repaying loan. And again, I'm not gonna mention any specific platforms, but maybe that's appropriate for an investor. A self-repaying loan.
I love this idea. I mean, look, we're known, my franchise, we do mostly stocks and options. My strategies, trader and income, are based on trading. They're kind of evergreen, taking advantage of what's happening, volatility in the stock market, and buying great stocks that get hit. And then legacy is this long-term, let's try to find things that have a 3-to-1 risk reward, minimum of 100% return. And I think these are big, meaty strategies. What I like about everything that you said, Bitcoin and gold are sort of like ballast in the ship. It doesn't make the ship necessarily go faster, but it makes the ship be more stable. And Bitcoin, I mean, I'm not kidding. We could wake up next year and Bitcoin would be $100,000. I mean, by year end. I would not be surprised. I think there's a much higher likelihood Bitcoin is 100,000 than 10,000. Across any time frame. But what I like about what you're saying, with Get, with Get, I think it's like an optionality, right? If there's a logic to it, it's like buying a small cap stock that has a big TAM, total addressable market. Maybe you buy it, you put it over there, you kind of say, you don't necessarily, but you kind of say, okay, I lost all that money, and then see what happens. And then the Ethereum one, if people are willing to dig into it, it's funny, is like our trading platform, our HX Trader, those ideas like churn out income and HX income, but they take a lot of work. You really got to understand what you're doing, and that's what we're here for. I feel like this Ethereum idea is the same thing, that if you do the digging, do the work, you can create something that can create some nice income. It's not without risk, but it's kind of off the run in terms of what people would normally see. So I like the combination of these four ideas. Real quick, and I'm gonna be honest with you, I don't know the answer to this. Whitney and I ran Empire. We had our own products, and Stansberry was over there. Which are the products that you run day to day, or that you're involved in day to day? I think I know the names, and just what is their methodology, or what's the goal of the products?
Crypto Capital.
Which ones?
And the Crypto Capital, well, there's two. First one is Crypto Capital, and it is literally just pure cryptocurrencies that we own gold in the portfolio, but it's tokenized gold. We own diamonds, but they're tokenized diamonds. But we also own a lot of we own a spectrum of cryptos, blue chips, Bitcoin, Ethereum, but also other medium-sized and smaller ones that we think the next wave, et cetera. So we're always on the lookout for where's the technology going? Where are the users going? What do we need next? What problems are being solved, et cetera. So, but it's all pure crypto. But then I'm also...
And can I say one thing too? Like, I mean, obviously crypto got fucking destroyed, but I still look at it and I just look at the optionality, you know, and we talked about this in the growth area. One 10-bagger makes up for 9 ideas that go to 0, you know, when they're equally balanced. So I think in the right size, you know, depending on people's portfolio and goals, I'm still fascinated by the area. I think you've got the big one, you know, you've got the blue chips that I think you've got a nice demographic technology story, and then you've got these optionalities, and you do well on one or two. I think where people got out over their skis was 100% of their portfolio, and it was all in the whatchamacallit, the ones that could be 10 or 20 or 30 baggers. Sure. And then when they got the 30 bagger, instead of taking 50% of that cash and putting it on the sideline, they went and tried to find the next 30 bagger, and then, you know, you were left with just a bad money management strategy, to be honest.
That can bite any, no matter what you're doing. That's
if you're gambling, if you're Vegas, bankroll management. Yeah. We write about. Maybe I'll bring up one of my notes in HX Daily talking about bankroll management. I'm going to write myself a note on that, actually.
Yeah.
Okay. And
the other one is Stansberry Innovations report, and the main writer on that is a guy named John Engel, and his pedigree is fantastic. But I contribute to that, and it's basically just looking for the best companies out there that are innovating technology but yet also have a stock that we can make some money on. And we also talk about cryptocurrencies in that as well, because you know, you can't talk about innovation without looking at cryptocurrencies. So those are the two main ones that I contribute to: Stansberry Innovations report, and mostly stocks, some cryptos, and then Crypto Capital, which is just pure cryptos.
Okay, great. So the book, America versus Americans, check it out, please, your local bookstore, if not Amazon. Buy an extra copy, give it to your library. You know, Crypto Capital and Stansberry Innovations report. Sorry, I'm trying to go through it.
You got it.
You are on Twitter at Eric
R. Wade. Yeah.
Okay, at Eric R. Wade. I was doing the...
I'm kind of weak on the Twitter game. I try, but
that's okay. That's okay.
I'm a better reader than tweeter.
No. Well, but I'm going to say one thing, man. Like, you've just made people a lot of fucking money. Like, I mean, you across the last 5-10 years, and so I really encourage people to. I mean, look. So what's our goal here? You know, as I said, we want to take complex concepts and put them in language that everyone can understand. You know, we want to educate, but we want to make people money, give them ideas where they can actually monetize. And so, you know, we want stone cold money makers on this. You know, our saying is, let's make some money. And I think you've got a great track record. And what's more is you actually held up pretty well in some very spicy areas, even as they got, like, you know, fucking hammered. So I think it's worth following your stuff, because it just, you know, taking 5 or 10% of someone's portfolio. I mean, that's the other thing is, like, you know, if you've got 90% of your portfolio in the S&P and 10% in a well-defined crypto portfolio, that crypto portfolio could outperform by 3 to 5 times. Now you're outperforming the S&P by a serious number. Yeah. You know, you would double the performance of the S&P in that particular situation. That's not to say that the shit can't get cut in half. Anything you buy that could go up 2 to 10-fold, by definition, can go down 50 to 90. You need to understand that, position sizing, et cetera.
Oh, the sell-offs in crypto, I think they average like 85%. Or something. You have to know what you're getting into, and I think you just also hit one of the biggest messages is no matter how big your portfolio is, you got to find what percentage is right for you. For some people, we say, you know, when someone's just getting started, we say, well, what would you put into a high risk speculative stock? And if you'd put $200 into it, then you should start your crypto portfolio with $200. If you put $2,000 into a high-risk speculative stock, I don't mean all of your stocks. I mean just one. So to start off, your portfolio should have one tiny position of crypto, And as you get to know it, and as you learn it, because there's a learning curve, and you don't be in too much of a hurry to get too much of your money into it until you learn. But I'll also say this is that it's volatile, and you have to own that. You have to know that there's work to be done to learn cryptos. You can't just buy some of these, straight off the debit card. Click on Amazon to buy some of these, right? That's the payoff. That's why we get paid more. We do a little bit more work. We take a lot more risk, and that's why we get paid more for cryptocurrencies.
So we sort of have three sayings besides "let's make money" in inverse order. Trade a lot or don't trade at all. Plan the trade the plan. But the first one we say is do the work. It's like anything in life. The more you do work, the higher likelihood you have success. If you're just throwing it out there, putting it on black, it's very risky. So, Eric, I want to thank you. Check out Eric's stuff. I mean, I'm serious. I'm going to go dig into the Ethereum thing. The income idea there. Appreciate
I love that idea. Self-repaying loans. What could be better than a self-repaying loan, right?
I'm down, man. I'm sure there's some catches in there that I want to understand, but I want to dig into it. So again, Eric, I want to thank you for your time. Check out the book, America versus Americans, and
thank you.
We appreciate you joining us on the HX podcast here.
It's been a blast, like I think we knew it was going to be.